Hello everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Wednesday the 19th of March. The handover that we've got from the Asian markets is fairly muted actually. There was certainly some positivity yesterday afternoon following on from Vladimir Putin's speech that suggested that Russia did not favour a breakup of the Ukraine, and certainly calmed market fears around that. And that was certainly seen in the chart of the VIX, which continues to fall away. The volatility, which spiked strongly higher on Monday, is significantly lower once more again yesterday. So that has certainly helped risk appetite in asset classes. And what we've seen is a positivity in the equities. There was a bounce yesterday, further gains in Wall Street, slight gains overnight in Asian markets. Certainly the Nikkei was higher. That was helped by a weaker yen, again on the back of this improvement in risk appetite. But there were issues in China. There was a third default this time of a property company that potentially now will question people. So investors will question the health of the property market in China and how that's going to move forward. So that could be an issue to bear in mind. And certainly, I think these defaults that we see in China are going to be a drag on the market on an ongoing basis as and when they happen. So just be mindful of that as they come through. The market focus for today certainly will be on the FOMC meeting, which that comes this evening. That's Janet Yellen's first chairing of the meeting of the FOMC in the last couple of days, and there's a press conference after the statement tonight. And certainly the market will be looking for clarification, I think, over forward guidance with unemployment so low towards that 6.5% threshold. The market will be expecting her to change forward guidance and possibly do what the Bank of England have done and give it some sort of qualitative target, I suppose, with capacity utilization, things like that, and also other key metrics could come on board as well. So it's likely that the FOMC might now ditch the unemployment target altogether. But we wait and see on how that takes shape tonight. Certainly that could have an impact on risk appetite as well this evening. So 6 o'clock London time, that is due to hit the wires. You've also got UK unemployment today. There's quite a lot of UK data actually. UK unemployment is one data that comes out at 9:30 today. This is the claimants chart of claimant count. That is actually set to come in at minus 25,000, so slight deterioration there. But certainly unemployment is in the UK on the right track at the moment. Anyway, and that's at 9:30. You've also got the Bank of England meeting minutes. No real expectation of any major changes there, but the key thing for the UK today will be George Osborne's budget. That starts at 12:30 London time, and that could certainly have an impact on sterling. My chart of the day I'm going to be looking at is Aussie dollar. The Aussie has continued to recover actually against the dollar, and it's now very, very, very close to completing a base pattern on which would be a 3-month base pattern. Needs a move, or I think probably a 2-day close above the 91.33 level. I think there or thereabouts is what you need to be looking for. The overhead resistance comes in with this 200-day moving average, which has provided resistance on that key October high, and could once more be the basis of resistance as well. So you need to be mindful of that. But certainly you would say that this chart is beginning to push higher. It's found support nicely around that 89 figure level, and is pushed above the 90 figure level. So that is an interesting move. Moving intraday, this Aussie dollar continues to, certainly in the last few days, find support at higher levels. And the key low you'd certainly be looking at is 90.61, and that needs to stay intact for this recovery to continue. But certainly there's a nice band of support now between 90.61 and pretty round about 91 big figure. So I think that is a nice band of support where I think could be used as a buying opportunity if you see it today. As I said, the rate today is actually now finding support above that 91 big figure level. These momentum indicators, this is on the hourly chart. The momentum indicators are all in bullish configuration. MACD nicely situated above the neutral line. The RSI continues to come back just below 50 to find support, and the moving averages are all advancing. So I think this is a bullish a chart that's beginning to look like it's going to complete this big base pattern. Completion of this base pattern would take you, or certainly imply, a target back above, back towards 96. So that is what we'd be looking at into the medium term, but certainly near term it looks fairly positive, and the test is on today. Anyway, I wish you good luck in your trading in Aussie dollar, and I will speak to you later. Thank you.